Over the past decade, investors have found it increasingly difficult to find return due to financial market volatility and an environment of record low interest rates that we find ourselves in. As a result of that, assets such as fine wine have become increasingly popular. Now, the reason that fine wine has become popular as an investable asset class is that fine wine has unique characteristics that, over a long period of time, mean that fine wine will always increase in value. Fine wine, if you look on the supply side, is a market that is relatively niche when you compare it to the global financial markets and other investment products. The total value of wine traded on the secondary market is worth around $5 to $6 billion per year. But what that does mean is it does have the liquidity for private investors and private investor capital to put their money at play within this marketplace. So therefore, the wine market is relatively uncorrelated to the financial markets because you don't have institutional funds at play. You only have private investor capital. These producers are making from anywhere, if you look at, say, some of the top Burgundy producers, from maybe as little as 3,000 to 4,000 bottles, which in cases is maybe 500 cases of wine, and then to some of the bigger, larger estates in Bordeaux making at the most 15,000 cases or around 150 to 200,000 bottles. So wine has this unique ability to always have a dwindling supply of that particular wine. So every year that a wine is in existence after it's been bottled, the availability of that wine is going down because people are taking the corks out, they're consuming that wine. There will be a time when a particular vintage of a particular wine, there will be 0 bottles left because it's a consumable product. Wines improve and they mature with time and age in the bottle. So if you look at the demand side and supply side of wine, you have a ever decreasing asset in terms of availability on the market, and you have ever increasing demand for that particular product. Those two factors alone mean that over a long period of time, 5 years, if not more, fine wine prices on average will always increase. And therefore, for an investor, it's a fantastic opportunity to invest in an asset class that is tangible. So this is something that exists. This is equivalent to buying property, buying bricks and mortar. This is physical cases of wine. It's also a product that has a store of value. I mean that if you take some of the best wines in the world, people have purchased and enjoyed the best wines in Bordeaux for the last 300 years. So over the last 300 years, I can say with absolute certainty that the value of a bottle of Mouton Rothschild has always had a dollar value in the marketplace, which you cannot necessarily say about other investment products. For example, buying shares in a company. If the company performs poorly and goes out of business, your share becomes worthless. A bottle of Mouton Rothschild will always have a value in the marketplace. So it has a unique quality to provide an investor a tangible asset class, an asset class with a store of value, and it also provides an individual the ability to invest in a product that has unique demand and supply characteristics which will result in prices always increasing, and therefore delivering you as an investor a consistent low risk investment return.